So 2 weeks ago, we saw a banking crisis started in the US with Silvergate, Signature Bank, and then we saw Silicon Valley Bank blew up in front of our eyes within 48 hours. Then we were told by the regulators and the global elites that everything is fine, you don't have to worry about it, we have tools to take care of all these deposits, and we will make sure that everybody is insured. But then we saw the contagion effect goes across the pond and then blew up a 130 years old financial institution, yes, Credit Suisse. And then we are seeing another G-SIB bank, Deutsche Bank, is also going through crisis and its stock is plummeting right now. What's happening in the global monetary system, how this is going to impact your portfolio, your real estate properties, and the overall economy. So we have to look into this. In this video, we're going to touch upon that. Let's go. Alright, if you're new to my channel, my name is Yasin Nizami and I make these videos to share my knowledge with you so that you can protect your financial future, because that is going to be very bumpy ride, my friends. So buckle up. Alright, so let's start with what we have been told so far by Federal Reserve and the Janet Yellen and the parties, that everything is sound and sexy. You don't have to worry about the financial system. The banking system is under control, but yet they are having some emergency meetings. And the data that they are sharing with us in the form of Federal Reserve balance sheet, it's not showing us some positive signs. So let's take a look at what has been done so far by Federal Reserve in order to protect the contagion effect across the financial system. Number one, they have set up a temporary loan facility. They call it BTFP, which is basically for banks which are under stress in terms of having a unrealized loss on those assets in terms of the treasury that they have bought. So the Federal Reserve is going to issue them a loan for 1 year in order to offset their unrealized loss, so that they can protect the deposits that they have to insure to their depositors. So that is already set up 2 weeks ago, and it is still kind of not going down. If you look at Federal Reserve balance sheet, that amount is still $53 billion. And then they also set up another facility called discount window, which is basically for any banks to rush into and have access to emergency liquidity. And that has also gone through the charts. We haven't seen the levels of discount window usage since 2008 crisis. And right now the levels of usage is way above what we have seen in the 2008 crisis, which is not showing us any confidence whatsoever in the banking system. Federal Reserve also have swap lines with the major central banks, and those swap lines are basically set up to provide emergency liquidity in terms of US dollars to those central banks, so that they can operate themselves in terms of having enough liquidity available in terms of US dollars. And those swap lines are typically operated on a weekly basis, once in a week, and now they have actually opened this across the week every day. Whoever needs liquidity, they can use those swap lines to access US dollar. By the way, those swap lines are only exchanged with the major central banks, friendly country central banks like Canada, UK, Japan, and maybe some Eurozone central banks. It's not offered to China or Russia or any hostile countries whatsoever. So that means this whole crisis is going to be used as a tool to kind of push the unfriendly countries down through the crisis. And then we saw something new in Federal Reserve balance. After a long time, we are seeing the FEMA facility is being used. So the FEMA facility is basically set up for the foreign banks to have access to liquidity if they needed some US dollars to operate themselves. And this facility has not been used lately until now, and we're seeing that the amount has gone up to $60 billion. So all of these signs, all of this data is kind of telling us that the system is going through a significant stress. The foreign central banks as well as commercial banks are going through liquidity crisis, and which is the reason why we're seeing these FEMA facilities, the discount window, and BTFP is being used heavily by these banks in order to get liquidity at hand. And every single major bank and financial institutions trying to get access to the US Treasury so that they can have some sort of a solid collateral and protect themselves, so that if something happens, they have something to hang on to it. So all of these things are telling us that there is something really wrong in the system, and what the Federal Reserve or Janet Yellen is kind of telling us that everything is sound and strong doesn't seem to be very reassurance at all. At the same time, we saw the Canadian retail sales came out a little bit stronger than expected, which means Steph Macklem might be looking at it, if the economy is still growing, I think I should continue raising rates. But I think raising rates is going to have a tremendous double whammy on the economy, because if the banking crisis is going to continue, that means they will start restraining in terms of issuing any more loans in the economy, because if they're going through lack of capital and they wanted to keep themselves protected in terms of any liquidity crisis, they will cut down on issuing new loans. So we will see some lending criteria being tightened in the economy, which will definitely put some more strain in the economy. So I think all the central banks right now thinking about it, okay, this whole banking crisis is going to create a lending contraction, which makes our job easier. That means we don't have to increase any more rate hikes, because the banking crisis will do our job to slow down the economy. And by the way, surprisingly, Canadian immigration has gone by 1 million people on an annual basis. That is a significant increase in population since World War II. So that is another challenge the Canadian government is going to face, because if they don't have the housing for those new immigrants coming into this country, that is going to put a lot of strain on the system, on the infrastructure like healthcare and housing. That's not going to be solved anytime soon. We will continue to see some competitiveness in the housing sector because we don't have enough inventory. Simply, existing homes are not being put into the market. The new constructions are not coming into the market as per what we expected. And then the immigrants are coming in at a higher pace. That is going to make things even more complex for policymakers, as well as the people who are looking to buy property for their own home. So that's it for me this week. I hope this was helpful. If you like it, give me a thumbs up, subscribe, and follow this channel as well. So I'll see you in my next big video. Take care.